Welcome back to Kiwoon. My name is Caleb, and today we'll be going over Sofi. They are a personal finance company based out of San Francisco, and Sofi has done huge promotions with YouTubers like Mr. Beast, Dude Perfect, Mark Rober, and now the brand new stadium of the Los Angeles Rams, SoFi Stadium. I think that this could be one of the best marketing plays ever, with the Super Bowl on average getting over 100 million people watching them in the past decade. And in this video, I'll be getting into SoFi's numbers and why they have such a high upside for a company that is not currently fundamentally sound. Now let's get right into it. So to start off, we had this article written by David Broughton that talks about how SoFi Stadium naming rights will total out to $625 million by the end of the contract. And in this first year, from July 1st, 2020 to March 31st, 2021 of this year, SoFi is going to be paying $9.8 million. And this amount could increase as much as $12.7 million, saying that it's going to be roughly $30 million annually over a 20-year period, or roughly $600 million. And the aggregate total will come out to roughly $625 million, with stadium-related expenditures at $3.9 million. And so while this seems like just a bunch of numbers, SoFi is spending over $625 million when they're actually not profitable right now. And so we're going to be going over their numbers and their user growth right now. And as we can see here, their member and products growth is this. Their total members over this past year grew over 96% from 2.9 million from 1.5 million. And this marks SoFi's second largest quarter of the new members additions, at approximately 377,000, and a 35% increase from approximately 279,000 new members added in the second quarter. So these numbers are amazing, right? These numbers are coming out great, and even in the products over this past year, we saw over that 100% growth. And while this is really important, we also need to know that SoFi currently is not profitable. When we look at their earnings, they've only reported one earnings, of course, because they just IPO'd a little bit of late last year, and their first earnings were absolutely terrible. Their estimated EPS was only minus 7 cents a share, and then they've reported losing 48 cents a share. But their last quarter wasn't too bad. They actually were almost near positive in terms of EPS, and posted only a 5-cent loss per share. And so I think if SoFi can actually become profitable by 2023, 2024, it's going to be really solid for SoFi, and their stock might actually do okay. And this analyst gives a lot of reasonings behind why. He gave them a buy rating and a price target of $17. See, SoFi right now is only trading at $12 a share, so the $17 price target is up over 40% of where they're currently at. And he states that SoFi has currently been focused on driving member growth at the top of the funnel, citing the company's traditional products like SoFi Money, SoFi Invest, and Money Tracker SoFi Relay. And he thinks all these products together and the way that SoFi is marketing is going to essentially boost them into super high user growth and very profitable very quickly. And while I agree the exact same, I think that SoFi cannot dig themselves into a hole like DraftKings did and market overly and too much, or else they're going to not be profitable at all. And I think if we have these numbers coming in from SoFi, he states that of the 10.26 million above analyst forecast of 3.8 million, revenue for that quarter was 277 million, when the expectation was 251 million. So essentially this guy, analyst Mihir Biata, essentially believes that SoFi is going to keep on beating their revenue growth, just stating that their numbers look really solid right now, and he thinks that there will be super high upside. And this also leads into what the short interest is right now. See, fundamentally, SoFi, as I was saying before, they're not profitable, even though revenue and numbers look great. They just haven't been long enough that a lot of people think that they will do well. And this has a lot to do with their short float. Short interest or short flow is essentially the amount of people in the market who are trading the stock who think that the stock may go down. And as of the end of January 31st, short flow was reported at nearly 17%. And this is insanely high. And this was up over 33% from the last report only 2 weeks prior. And this is really big because companies like this can easily get into a short squeeze, which can lead them to going up a lot. And from a trading perspective, I think SoFi, if they break through this $12.50, $13, $14 level, they'll have a decent rise. Although stochastics aren't really telling us much, they are still currently going probably sideways for a little bit now, but I do think the Super Bowl news is going to be really big for SoFi and may project them into larger numbers and products into the next future. But yeah, guys, that's basically all I have. I just wanted to do a little bit of guidance and understanding where SoFi's projections are coming from analysts. Hope you guys have a great rest of your day. Make sure to tell someone that you love them, and peace.